it's a $5 trillion market. Only like 10% of the country speaks English. But with the translated checkout, like if you with some localization, I think you can definitely increase the orders. All right, welcome to another episode of the Decoding Cross-Border podcast. And your host, Clint Reid, along with Aaron Bezzant. And today we're going to talk about selling into Japan. But I think there's a few things to talk about, but excited about talking about that.
You know, speaking of Japan, I really like your shirt, Clint. This is a new shirt we have here, right?
Yeah.
Can you give me a little background on this shirt? It says September 1st, 2009. That's 15 years ago.
Yeah, there's like dual meaning to this shirt today. Okay. So 15 years ago, I woke up and I remember grabbing my phone and seeing an email. And that email was for some balloon sticks going to Japan. And it was the very first order that Zonos had ever gotten, was to Japan 15 years ago, September 1st, 2009. So
this is you as this scrappy entrepreneur that quit your job, went all in on this new vision that you had. And this is the first time. This is like people that put their first dollar in a restaurant up on the wall, right? Like this is the first time you have money coming back in versus going out, right?
And I put balloon sticks up on a wall because that's what the guy bought, was some balloon sticks.
I love it.
From a customer called Zonos. And now I, of course, had to email the person that bought it and said, thank you for your order, because I didn't have an email order confirmation even at the time, right? So this was our original checkout. But yeah, the only thing that it was able to do was take the order and take the payment. Very rudimentary calculation of duties and taxes, which I think it's a lot better than now than what I was doing then. And yeah, I remember I sent an email to Tyler over at Zonos and I said, order one of a billion.
Love it.
And so yeah, we still have a ways to go. Actually, we might actually be pretty close to, we're probably pretty close to a billion now in orders that we've facilitated internationally. We've facilitated a lot.
Dude, that's awesome. And it's fitting we're talking about Japan, which if that's the first order, that means it's at least a relevant market for our customers, right?
It is.
How relevant?
Well, okay, so it's a $5 trillion market. And now, though it's a big market, only like 10% of the country speaks English. So in terms of, the percentage of your orders that are probably going to Japan, it might only be about 1.3%. That's kind of about the average that we have. But with the translated checkout, like if you with some localization, it is actually, you can get that number a lot higher than that. That lot higher than the average, because with, I think, a little bit of effort and worrying about that customer base and their experience, we'll talk a little bit about their currency and things like that. I think you can definitely increase the orders. But in Japan, they love sushi. Did you know what the sushi said to the bee?
What did the sushi say to the bee?
Wasabi. Wasabi.
I don't know if I should laugh or cry.
Wasabi. I think that's one my kid would tell.
My kids would love that one. I'm taking that one home.
All right. Okay. So definitely a big market. Want to tap into it. And let's talk a little bit about now actually shipping cross-border into. And so in these country kind of specific episodes, we'll talk about everything from the landed cost to the de minimis to the market size, the opportunity, how to tap into the market, and de minimis value. So let's talk about the de minimis first, and let's dive into landed cost, and because I know it kind of gets a little tricky there. So tell me a little bit about the de minimis value into Japan.
So it's 10,000 yen, or if the amount due is in duty or taxes 100 yen or less, they don't worry about it. And that actually kind of reigns true. If it's under 100 yen, they kind of just, it's nominal. They don't worry about it. So what's 10,000 yen? And let's
I want to say it's like $68.
I'm going to find out right now.
Okay, let's see if I guess right.
Yen to USD, you said?
Yeah.
$68.59 today.
Now, I did not look that up, but I did
That's
look up the
pretty
currency
darn good.
conversion, and I'm pretty good at, I must be pretty good at math if I was able to figure that
That's
out.
impressive. That's impressive. So yeah, that's quite low, right? Compared to other countries, that's a lower de minimis.
Right.
So most things,
Most of your shipments are going to
duty.
average order value typically for online retailers that are selling internationally is about $150. I mean, $135, $150. And so, yeah, most likely you're going to be getting hit with some landed costs in Japan.
And now they do have some exemptions to that. Things like, if I'm looking right here at the Japan website, they say, leather bags, handbags, gloves, knitted apparel, even talk about ski boots, leather shoes, footwear, that type of thing. Most of those things are over $68 typically anyways.
Yeah, good point.
So, but if you have any low value things in those categories, they're going to apply duty and tax no matter what.
Now, we're the 10,000 yen. Let's talk a little bit about yen itself. And then let's dive into a bit about the landed cost. So first off, it has no decimal places, which is, if you're in the US, you're used to seeing decimal places on all your currency. So there is no decimal places. They do have like 1 yen and 5 yen coins, but there is no, it doesn't get, of course, any smaller than that because it's just a rounded currency. But because it's a high number, it's not uncommon. You're going to see hundreds of thousands of yen on stuff, for rent, things like that. But it's that non-rounding causes some issues. But okay, we're gonna wait for that to talk about the.
Okay. Let's talk about duty.
Let's talk about duty. Sounds
good. With duty,
it's about 4.3% is the average duty going into Japan. So I mean, it's not terrible. I think that's fairly reasonable. It's not too bad.
Yeah. No, that's
and it's applied CIF to the order.
I'd say that's on par or a little less than what we typically see out there. Mm-hmm. So yeah, that's pretty reasonable. So that's not going to be like some of the other countries where it creates a massive barrier to selling goods. So that's good.
And CIF, why don't you explain what CIF is?
It's going to be applied to the total cost of getting the goods there, which is the price of the goods as well as any shipping and insurance costs that the customer paid to buy it.
Okay. What about tax? Or anything else on duty?
Nah, that's good. I think we're good there. There's nothing too crazy there. I will talk a little bit about duty a little more when we kind of get into specific stuff that's unique to B2C shipments, but I think that's good for now. Tax. The standard tax rate is 10%. There are some items that get 8%. Now, most of those items are like food items and newspaper things and stuff like that. I think for cross-border, it's typically
probably going to be
10%.
And it's a consumption tax is what they call it, or do they call it like a VAT?
It's actually two. It's a consumption tax and a local tax combined. So
okay,
the way it's calculated, and this is where you get some weird math going on here. The consumption tax is 7.8%. Okay, and that's going to be applied to the duty and the CIF value. Then the local tax is added to that, which is it's actually 22/78 of the consumption tax amount, which in the end works out to be 2.2%. So the two together make 10%.
What was this? It was 22/78
of the actual consumption tax amount. This is important because we'll talk a little more about it later. But so it's actually not calculated against, the CIF value is actually calculated against the consumption tax.
Got it. Yep.
Does that make sense?
Yes, that does make sense.
And so in the end, those two together actually work out to be about 10% of the CIF amount. But it's unique that the tax is against
when you
the
say
tax.
About 10%.
Oh, well,
is that
we're gonna unpack that a little bit here. I do want to talk through one other thing, and then we're going to go into some deeper calculations. But then you get into B2B and B2C. Okay. B2B is, I'm going to touch on it for about 10 seconds. It's pretty straightforward, normal landed cost calculation. The value comes in, it is what it is. They take the CIF value and apply any duty and tax and everything, and you're off and running. What's cool about the B2C world, though, is they actually give you a reduction. In fact, the duty and tax is actually lower on a B2C shipment than it is on a B2B.
Which is uncommon.
It's
typically
uncommon. Most countries are adding barriers to consumers buying.
right. Usually, if it's B2B, because it's going to get resold, they'll get their, let's say, consumption tax and their VAT. Then a lot of times that might not apply on the import, so it's actually less expensive on the B2C.
Uh-huh.
All right, interesting.
Yeah.
Okay,
Because you see other countries like a Brazil or India and stuff that are doing these flat tax rates or duty rates that are astronomically high.
I mean, how much? Like Brazil's okay, it's
60%.
Oh yeah, that is a lot higher than 4.4%.
Yeah, and it's higher than a business shipment. So, but this is how they do it. You take 60% of the value of the product. Now, shipping and insurance is separate from this, but you take the value of the goods.
Okay, this is the simplified. We're talking about the simplified.
Not simplified.
It's not
yet.
simplified. Okay,
No, this is just how you come up with the value.
okay. This is how. So they reduce the value of the goods.
So think of it as they're going to apply the duty and tax to the wholesale value of the goods.
Wow.
So they figure there's 40% margin. Anyways, that's the math. It's 60% of the value of the goods. So they're going to say, okay, that's what's going to be our taxable base here. And now insurance and freight will be still the normal value, but that's how they come up with the value to start applying duty and tax to. Now, when it comes to duty, they do have a simplified tariff schedule for personal goods that can be used. So instead of looking up the hundreds and hundreds of possible HS codes and duty rates in the normal schedule, they have it broken down into a smaller group of buckets that it'd be easy for someone clearing shipments to be able to say, oh, I'm just going to throw it into this bucket, and it's like
their own.
But
it's not based on a harmonized code. It's just the type of good.
Yeah,
similar in the U.S. where you have U.S. tax rates that are based on the good type. There's not necessarily a code tied to it. Sounds like they're doing something into the country to simplify the duty rate based on the good type, not based on the actual duty rate on the HS that the HS code could have derived from.
Yeah,
okay.
and the duty rates, they're not high or anything like that. It's just more of just to simplify things for them clearing it. They're still right in line with the typical duty rates you'd see. So so that's how those are two very unique things with B2C shipments. So these are just shipments going to someone buying it for personal use. Now when you actually get into the calculation, Japan with the yen does a lot of rounding. So it's not straightforward. Take these percentages, apply them, and you get the exact calculation. You actually get a lot of rounding.
Are they doing rounding, or you have to do rounding? They are doing
rounding. So, but if you want to predict what you're going to get charged, you have to accommodate the rounding, and there's lots of rounding happening within.
So why do they have to do rounding when the currency is already not? There is no rounding in the currency. I'm sorry, it's already a rounded currency. There is no decimals.
So at a minimum, everything is going to be rounded to at least 100 yen. 100 yen.
Okay, got it. Yep.
Some things are rounded to 1,000 yen. So the easiest way I would say to break it down is when you're looking at the customs value, the value of the actual consignment that's moving across the border, they'll round that to the nearest 1,000 yen. So I'm looking at a couple different examples here, but let's say this example I'm looking at here, a couple pairs of pants. The selling price is 5,400 yen. Okay. Times that by 60% though, right? Now this is one of those categories where the de minimis doesn't apply. So normally it'd be duty and tax free, but this one is one of those where you're going to apply it. Okay.
Okay.
5,400.
So it's under that.
Now 60% of 5,400 is 3,240.
Okay.
Okay. But that's going to be rounded to the nearest 1,000. And in fact, it's rounded down to the nearest 1,000, which is 3,000. So now the value is that they're going to apply duty to is 3,000. Okay. Now the duty rate's 10.9% on this example, which comes out to be 327 yen. And that's rounded to the nearest 100. So they're going to actually charge 300 yen. Okay. You following me so far?
I'm following you. Yeah, this is wild.
Okay, now we got to apply tax. So take that 300, but you don't apply it. You don't add it to the 3,000. You add it to back to the 3240. Okay, remember that original number that was unrounded. Yes. So 3240 plus the 300 in duty gives you 3540. Now you got to round that before you apply any tax. and they actually round down to the nearest 1,000.
Oh, geez.
So we're down to, in this case, 3,000 again, right?
This is crazy.
Okay.
This would be, I'm imagining like the Excel spreadsheet or Google spreadsheet I would use to do this.
Oh, it's insane. It's insane. So now, so now we're down to 3,000 again.
Yes.
Now we're going to start with a consumption tax of 7.8% of that, which gives you 234 yen.
In consumption tax.
Yep. Now, is 200, we're going to leave it at 234? We're going to round that, right?
Well, why not? Because they keep rounding stuff.
Where are we going to round it to?
Down.
Yep, to 200.
Okay, I got it.
Okay, so now we're at 200. Now we're at 200 on the consumption tax. Now remember, now you have the local tax, which is 22/78 of the tax. But when you do 22/78 of, do you do it on the 234 or the 200?
Hold on. Let me guess. I would say it's on the 234.
No.
Oh, dang it.
You do it on the 200. So now we're actually
local tax is getting taxed on the rounded down price. Got it.
So that comes out to be 56. Okay.
All right. Do you have to round that?
What do you round it to?
I would say to 50.
0.
Oh, jeez.
So
I was going to say that, but I'm like, there's no way it's 0.
Yeah.
Okay.
It's under 100. It just rounds.
I mean,
this
is the kind of stuff we do, but I don't know how it all works all the time.
And that kind of ties back to the de minimis, where it's like, oh yeah, it's 10,000 yen, or if the duty or tax that's payable is less than 100, then it just goes to 0. So they kind of just, if it's under 100, they just round it to 0. So now you actually, in this weird case, the local tax doesn't even apply.
Right.
So the actual
just because it had its like own de minimis essentially. They're like, look, we're going to round down, and if it rounds down to 0, so what? We're not even going to collect it.
But even if it didn't round down to 0, like it's still not exactly 10% because you're applying it to a rounded amount of the consumption tax.
Yeah.
And so you end up just paying this rounded down consumption tax of 200 and no local tax because it was under 100. So you saved on taxes there, which is pretty cool. And then your duty amount was applied to 60% of the original value that was then rounded down, right?
Yes, yeah.
So there's a lot of rounding that actually works out in your favor, but you have to do all the rounding like mid-calculation in all these different steps to actually get it 100% right. Crazy.
Yeah, that is just batty. The amount of countries that have crazy things, and this one is, and there's a few like this that are just, it's extremely unique. Because I can't think of many, if any, that are like this.
Not that I can't think of my head.
I mean, maybe a small country that. Okay, wow, that is wild. So, how do you solve for this when you're trying to do a landed cost calculation? Right now that you need to do that calculation, like what are some things? How would you solve for this? Yeah, I mean, we talked a little bit about this on the before the podcast. How
would you solve for it?
Well, I think you need, it's what you said. I think you need to line item things and save them off separately in order to pull this off.
Yeah.
Right. That's how you do it, because you can't do this all with a formula. Like you have to save off.
Yeah. It has to go step by step.
Step by step.
Mm-hmm. Yeah. You can't just do it all in one. I mean, I guess there's probably a way you could probably do one massive formula if you could do it, but it'd be the numbers.
Well, of course, but then how do you display, but the problem with that, which we've done, okay, a little bit about landed cost, because we've learned a lot over the past 15 years. Years ago, everything was basically formulas, but you could never break down after what you did inside the formula to the user, right? And so what we changed with our landed cost is displaying the formula and the amount on every single step. And so when anyone is using us anyways, right, you can just log in and just see all the details, not of just what the amount is, but of how it was calculated.
Yep.
Imagine if brokerage bills were like that, right? Like,
well, right here, I'm looking at a customs import into Japan, and do you know what they do? They break it out step by step.
they're missing their formulas. But okay, yes,
But
they are breaking it
there's
out
no
step
there's
by
no
step.
formulas, but this is the
Yes,
form
it's,
that comes out.
it's broken out step by step, right? And the right way to do it is the way that they're doing it.
It's still not 100% clear if you just look at this by itself.
Well,
but when you do some
Japanese,
research and
so
understand
yes.
the math, you can reverse it, by looking at the rules. But yeah, you have to break up each individual calculation on its own to be able to come up and actually make sense of the whole thing.
Man, that's crazy. Well, look, to anything else on the?
No.
All right.
I think
I mean, just to finish a couple of things. I mean, they do. On the restricted items piece, Prohibited is a pretty standard list. If you're selling anything that is consumed, just assume it's probably restricted, and you need to look into, be careful if you're selling it to Japan with, if it's a vitamin or something like that.
But to that point,
Yeah.
the type of companies that crush it in Japan
Oh, are these kind of
are
companies?
those kind of companies.
Well, I think, whenever there's a barrier, if you can figure out a way and you spend the time to learn how to get through that barrier, you're going to have an opportunity. Absolutely. Those companies kill it in Japan. There's about 16 different bilateral trade agreements. And that's excluding, they have 2 additional ones with European Union and the Association of Southeast Asian Nations, right? There's some trade agreements there. But again, the trade agreements are going to apply to the duty, which is pretty reasonable. And then again, with this, I think what you were just walking through, I would assume a trade agreement doesn't apply to those examples, or would it?
No, it could on the duty rate. It was
Right, on the duty rate, yes, yeah. But it's because it's not a simplified. I was thinking about a simplified, but it's not. All right, no, that's and then keep in mind too, like whenever you're shipping anywhere in the world, Japan, anywhere, and I don't know if you know what the carrier fees are there, but you're gonna get fees besides this duty and tax. And we talk about this in every episode. It feels like we're just repeating ourselves all the time. But for a listener that hasn't listened to the other episodes, expect fees from a UPS, both on the export and on the import. And between FedEx, UPS, and DHL, I mean, you can be in the ballpark of $15 to $25 maybe in total. So it can get expensive.
Mm-hmm. Yep. When they're handling money on your behalf and taking on some risk and liability with that, it's understandable they got to charge a fee for that service, right?
Yeah. And that risk is they're upfronting money to customs. They have to go collect it from you if they're sending it duties and taxes paid. Or if they're collecting from a consignee, now they have a COD fee they have to collect on delivery, and there's going to be a service fee for that. Yep. And it's all part of the game.
Absolutely.
All right. Well, hopefully this was a good episode, and looking forward to hearing any feedback. We get some great comments.
We do.
We do. So looking forward to some more. All right. Thanks, everybody.
Thanks, guys.